Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. So I'm now going to take a look at Kainos Group PLC. They're based in Belfast and their main centres have been London and Gdansk in Poland. However, in recent years, they've started building satellite offices mainly in Europe and the US. Currently, 81% of their revenue is based in the UK, and 85% of their profit by sector is down to digital services. This is basically digital transformation, where they go to a government agency or a company and help build all the apps and websites and software and stuff for them to digitalize their business. They also have this Workday implementation. Now, Workday is basically digitalization software, and they're kind of quite a big company. They're a private company, and Kainoss have basically one of their main partners. So Kainoss come in and do the project management and consultation to set up the Workday software at these third-party companies on behalf of Workday. So that's actually the bulk of their income. It comes from this digital transformation and Workday implementation. Now, the digital platforms, these are platforms that they've developed themselves, and these are actually only a few. There's Smart, which actually is part of the Workday implementation, and then their own ones are both pretty specific to the National Health Service. There's EMR, which is where in the hospital the patient's notes are all digitalized. And then Evolve, they tend to do digital transformation for pretty big companies. We've got Booking.com, Netflix, and then also for government agencies. So looking at their share price, and it's gone up quite a bit in the last 5 years. They listed on the London Stock Exchange in July 2015. Now, one thing that happened was around 2013, the UK government introduced their digital strategy white paper. And then there was another one in 2017, and that's when the UK government really started to spend money on digitalization of their processes. One big thing for Kainoss was they introduced their Evolve platform in 2018, and they then were appointed the Workday partner for Canada and I think also France in 2018. So they're beginning to expand. You see that the FTSE has been largely flat, really, particularly relative to Kainoss. And Kainoss, you can see big expansion in their share price over a long period of time, but it started to get quite choppy in the last year. Now, they announced that they were building a big new Belfast headquarters, a brand new one, in 2019. However, that's kind of been put on ice in their most recent update. And also, obviously, when we had the COVID virus, they were part of the wholesale discounting of stocks, but then they've started to rebound back up as they are a defensive stock. Now, in the 16th of April, they did release a trading update, and there was some good stuff here. They confirmed that they've got good positive momentum even throughout the coronavirus, and their year end, which ends 31st of March, showed them to be in line with current market expectations. And so that's kind of a nice, so the year end will be year end 2020, which will be this March. They should have about 155 million in income. So that is a great piece of news. But they also said that they have no debt and cash balance in excess of 40 million. So all looking good. They kind of mention a bit how in the lockdown, some of their key customers are needing digital even more than they did before to help kind of respond to the lockdown situation. So that's good. but they were a little bit negative about not knowing overall what the effects will be. And there was a couple of real negatives in this update. So one is that they said they have been placing staff on furlough, pausing recruitment, and also all the top executives are not going to take any pay or bonus for like the next 6 months as like a cautionary measure while they see what happens. And I don't know if this is like some kind of virtue signaling, or does this mean that the company is facing serious headwinds. And then the worst thing is they've said they're going to not declare the final dividend for sure and review how it's going. Have they done this because they've got problems? So a kind of mixed messages, but at least we know we can kind of rely on the predicted full year results. So looking at their profit and loss, and you can see how there's been a really good trend of increased income, increased revenues, and their actual financial year end is in the 31st of March of each year. And in their latest full year trading update, they have confirmed that despite the corona problems, they should be meeting their 155 million pro forma target. They've been pretty low on expenditure until 2019, and of course they announced they're opening this headquarters, a brand new headquarters, which I think caused some costs, but also as they sell more, they're spending more, they're having to build up their headcount, and we can see that their headcount has grown to 1,000 to 1,500 to nearly 1,600 approximately. So even in like the 2020 interim update, we see this large headcount, and that is a kind of worrying increase in cost of sales and operating expenses. And their net income, that's just their interim net income there of 10 million. But basically we're looking good. We're looking at more like 20 million according to their latest update. So we do get a nice trend of increased net income. So when I look at the this graphic display, their net income in history, it's a bit of a tight spread between income and expenditure. And they lately seem to be expanding into other countries, and that's all obviously costly, ever more costly an endeavor. And I feel like they fully expanded in the UK, and then they're now trying to get extra growth from going outside the UK. But the expenditure kind of hugs the income a bit, but they still then have been getting impressive net income results just because of the sheer scale of the more money they're making. Their revenue by region, and then we now start to see some pattern. It's really exploded in the UK. And then when we look at revenue by sector, we see that really digital platforms has remained stable, and this increased growth in revenue is all in digital services. So to focus on the revenue by sector, I actually found it quite hard to pick out where the different trends in the different sectors in terms of commercial, healthcare and public sector. But I was able to, by getting little pieces here and there, I was able to establish some numbers, and here's how I map that out on my Excel spreadsheet. So what I found was that, again, actually commercial is going up. So it was increased from 30 to 40 million. But really the main increases are always in public sector. Most of their business is in the public sector, and most of their business is in the UK. So basically Her Majesty's government, the UK government, is in a big way their biggest customer, and a lot of the sales growth for this company, it's through nothing other than the UK government. Is greatly because of the UK's digital transformation process that's going on in the UK government. So there's some other things I teased out. They've got a nice contracted backlog, which is still increasing even in the 2020 interim update. They struggle, they really are trying to have commercial a greater piece of the pie, but are kind of failing to do that. The government, particularly UK government, is still 59% of their income for digital services. And yeah, you see how important the Workday is for their non-governmental profits. You see how important Workday is, this partnership they have with the Workday private company. They've managed to increase their active customers to nearly 400 from 200 in the last 3 years. And I was pleased to see that they do report their customers they have, which are above 10% of their revenues. And it's good to see that it's only two in any given year. So they're not too reliant on one particular project. So looking at their assets and debt and their long-term assets, we noticed this increase in I think that's 2019, which is obviously this is the Belfast HQ and other offices they're setting up. They've got a nice, they've got a nice bundle of cash, and they confirmed it's still around 40 million in the April update. The one thing I really like about them is they have virtually no debt, and the equity, we see how most of the equity is basically retained earnings, which is good. So Kainos have an excellent history on their balance sheet and in terms of their income and earnings. They definitely are a good play on the future of companies having staff working from home and stuff. And they are a good play on the digitalization of companies all around the world. One problem I have is that all of their, the majority of their revenue is basically the UK government. They seem to know this, and they seem to be trying to use their Workday relationship and generally expand across Europe and the US in order to increase growth in the commercial sector, in order to not be relying on the UK government, which seems to be the goose that's laying the golden eggs. So this really is a bit of a concern for the long-term growth. So I thought I'd take a look into what is really the situation with the UK government and how much further growth can we expect in Kainoss selling their gear to the UK government. So it all comes down to the government's transformation strategy, and this was published in February 2017. Now we know that there were some white papers in 2013, but really 2017, this digital transformation strategy, this is where the UK government really was starting to put money into the digitalization of all the different government departments. So I found on the excellent website Statista some data of how much the actual government digital service budget is, and this was actually so not looking so good. But then I realized that this was kind of the bureaucratic kind of bumbling government deciding this is what we're going to do kind of phase. And I realized that actually then following this process, the money, individual departments, government departments, are then spending real money. Now, in the latest Kainoss trading update, they make a big thing of showing off who the different government departments are, who they do business with. So I thought I'd go and have a look at these different government departments to see how much of a focus is there, and could I see any clues to how much those different government departments were spending on digital transformation. And these are the different departments. So starting off with the NHS, and in the NHS they've got this thing called the long-term plan, and this really does have money, some serious money, that the UK government investing in the NHS all the way up to 2024. And I looked at the key documents here, and they do they do say that delivering digitally enabled care across the NHS is a key focus of their long-term plan. And this digitization is aimed to not finish till 2024. When you then look on the NHS websites, you see this. They've got a whole unit set up now, which is called the NHS-X. This is actually a special unit to help roll out the digitalisation process. And it says here that they're actually still only going through the consultation period in 2020, where, you know, it makes it quite clear that the NHS and healthcare are going to continue to be a nice little cash cow for Kainos. So that's a given up till 2024. Then I went on to the Department for Environment, and they're called DEFRA. And here there really wasn't much. That, you know, digitalisation is more just a soundbite for them. And when I looked at their website references, really I didn't see much. And I looked at their annual report. So it's quite interesting. So, I mean, here's the Department of Justice as one, but each government department, they do their own like annual report and account, a bit like how companies listed on the stock exchange do their annual reports. It was just interesting that in the public sector, they have these same similar glitzy reports. So I went through each of those and did a search for how many times is the word digital, and then it gave a good way for me to quickly go through and find references to their digitalization process, to then see if I could assess potential money making opportunities for Kainoss. Unfortunately for DEFRA, there was only 5 references. So DEFRA, really, I can't really accredit anything to them beyond 2020. Then Ministry of Justice, a lot more. In particularly, they're kind of the official government website for Ministry of Justice, not so much. But then when I started looking around for other sources, I found that there was a main estimate memorandum that they sent to the UK government around their costing. And in here, there was actually a couple of big projects listed. We found that they were spending about 300 million on tech in their annual budgets. There are actually 2 big projects listed. One of them kind of going to be ubiquitous across the whole social justice system. That's actually finished. But then there's this other one where it's about people's access to courts, so that it's more digitalized. You know, when you have any kind of business with a court, it can be done more through a website and through an app. And then how the courts operate could be more efficient if it's done in a digitalized way. And here, that doesn't end actually till 2022. And then when I looked at the annual report, it is an important part of their current game plan. I mean, there's some interesting things here where when you go to a divorce court or small claims court, a lot of this thing can be done digitally rather than actually having to go into a court and go through a load of bureaucratic processes. Maybe, I don't really know the details, and then also this interesting thing for prison officers, where presumably it's some kind of app, so that when they're having to do their important jobs in a prison, they could use digital toolkits to help prevent mistakes. I definitely saw enough going on with the Ministry of Justice to give them until 2022. Then the Land Registry, and they really are big on a total digitalization of this. And when you look at their reports, they talk about a transformation program till 2022, all digital. This digitalization process that the Land Registry is going through, they call Digital Street. And you can see how apps and then websites will be all connected their land register will be completely digitalized, and it says here by 2030. Actually, there's a lot of digital stuff going on with the land registry. There was 118 references to digital in the land registry annual report. So yeah, so the land registry, we think we're safe up to 2022. So the DVSA, they're the driver and vehicle standards agency. The digital aspects of that, I could only really see a link till 2020. And then the Department for Transport, they were quite interesting because I wasn't really expecting them to be big on digital, but they really are. And on their website, actually not much. But then when I look at their annual report and accounts, there's talk of the rail signalling investment in that, digitalizing that, and also they've got this digital railway long-term deployment plan. And parts of this really do stretch out. I mean, they even say 2029 here. Then they're spending 10 million on a new service which helps the management and communication of roadworks. They talk about their bus open data digital service. So they're using digital gadgets to help connectivity to their bus services. And then there's the biggest thing is to do with their railway investments. So there's a massive railway long-term development plan where the government is investing a lot in improving the railway. That's actually, it looks like there's a 450 million ring fence for that here, which seems to be specific to digital schemes. So for the railway, I've placed that we can see potential money making for Kainoss till 2024. And then finally the home office, I could only really find limited references till 2020. Having looked into it, the UK government is a goose that keeps on laying the golden eggs. But really, after 2020, you wonder, it looks like there's going to be a reduction in revenues. This is kind of a problem with Kainoss, is that are they in an inflection point here where their amazing revenue growth history has been boosted by the public sector, but they kind of get to an inflection point soon. Whereas, maybe as soon as 2020, their income from the public sector and in the the UK government starts to decrease. And then so this is where they find themselves in a situation where they're having to, in order to grow their commercial revenues, they're having to expand across Europe and the US to try and desperately increase their commercial revenues to make up for potential losses. When the goose that's laying the golden eggs, and that's the UK government, starts laying smaller golden eggs in coming years. So they're in this situation, amazing growth and kind of confirmed into their 2020 year end. But what about their 2021 and onwards? Are they going to be able to increase growth in the other areas to make up for potential losses in the public sector? So to recap on my strategy for Kainoss, I look at them as a defensive stock because their revenues are relatively safe versus more traditional companies, and they are currently on a 20% pre-corona discount. In the next month, I plan to buy at least one stock, and this could be one of them. I'm going to compare them with some other defensive stocks first. If I was to buy them, then I would be keeping an eye on their revenue growth, because it'd be important that they keep on increasing their commercial income outside the UK in order to make sure they're able to keep on going with the growth once the UK government stops laying its golden eggs. The UK government's digital transformation process has been a real bonanza for this company across all departments. So I would then exit them only, really if I saw a failure in their growth strategy. And so the main risks I've already explained. Also critical to this company is their partnership with Workday. So that's definitely something that's like a significant risk really if that went pear-shaped. And also I noticed that their operating costs are increasing. They're employing more and more people. And I'm a bit worried that as they expand outside the UK, it would end up just reducing their net income in a bad way. So that's something to keep an eye on. So I think that Kainos are certainly a good contender for a defensive stock, which I'll be comparing against a few others I'll be researching. And I think they're a good contender. They've got quite a solid background and they're a really good play on digital transformation. They certainly are a good play on this modern day trend towards people working more from home and through companies digitalizing themselves. I identified that they rely a bit too much on just the UK government, and this could be a problem, and I need to consider that. Also, how they're going to have to expand in the US and Europe more to increase their commercial revenues. So I'll probably be buying one stock this month, and like I say, Kainoss will be a contender. When you look at their progress against the FTSE, you'll see that they are currently at a 20% discount at what they were before the Corona crash. It's been a bit scary seeing them rocket up though the last week. The other day, I mean, they were up 5% one day. I kept on doing my research and then they were up another 10%. So it's a bit scary. I saw actually only today a news article that apparently the US job losses are now 20 million, and apparently unemployment is going to be 15%, and that is really bad. That looks really bad. And apparently post World War II it was 10%. So the current stock market valuations generally are looking crazy. But you know, I think I'll just be patient for another week or so, and if I'm really lucky, there'll be a big crash and I can get a better price. But otherwise, I will be anyway buying at least one stock this month, and let's see, it could well be Kainoss. First of all, though, I'll be taking a look at some other stock to come up with my ultimate defensive pick.